and welcome to another Major Market Movements End of the Week Market Review for August 7th, 2015. I'm Quad G, and in this video we're covering the PM complex, starting off here with gold. Gold is still in this kind of range-bound spot here, roughly between 1080 and I'd say about 1100 to 1105. And so far it's not made any real serious, given us any real serious indication of a turnaround just yet, or fall through the upside off of the previous hammer candle that we saw a couple weeks back. But that hammer candle has done a fine job, this blue one right here, has done a fine job of securing a bottom for the past several days. So, you know, again, while we continue to be above that key level support there at the bottom of that hammer candle, that low is at 1076. While we're above that, there's still some opportunity, some potential for a rise up to fill in some of this manic drop and back test these breakdown points there at 1130, 1142, and also this midterm trend line that came down all the way from the top back here in January. There's a possibility we could spring up from here and retest that trend line as well at a later date. So, but it all hinges on staying above 1076 at the moment, which it's still doing. It's just requiring a great deal of patience on our part to hold on to this position, alongside position. The gold on the QG3 was in a bearish alignment. We did see the three EMA cross below the lower Bollinger Band, and that was a signal to us that we were going to see a bounce here, or at least a pull back inside, a corrective move back inside the Bollinger Bands, and the market did exactly as we anticipated. The 20 DMA is coming down here quickly too, and that's going to be another key level of resistance, and that's currently sitting there at about 1106. So, which just so happens to be a key level of resistance over the last several days as well, right around there at the 1103, 1105 level. So I would say next week, that's going to be a key spot, key test that we're going to see early next week. If we see a daily close above 1105 and above the 20 DMA, I think that's going to be a signal that this market is ready to advance higher. But if we see a solid rejection at that level, say an outside key reversal, inverted hammer candle, something like that off of that resistance, then that'll probably be a clue that it's just not quite ready to go, and we may end up seeing the market drift off a bit lower, maybe retest the lower Bollinger Band, which is starting to curl around here, and that is currently down there at about 1057 or so. So there's a chance that the market could come down there and test that, maybe even go down as far as 1040-ish, which wouldn't be all that bad of a situation, actually. If that were to take place, there's some indication that it could be set up a positive divergence in some of the oscillators. Gold on the weekly, we closed it just as an inside week, as a long-legged doji there. This could be a potential harami at the end of a long sell-off here, but I would want to see the price come up and close next week above the top of this gnarly-looking candle, and that opened up at 1132. So I wouldn't really depend upon that as a bullish harami until we saw a close above that, and then that would be, if that was to take place, that would be a fairly good signal that we may have just sealed in this bottom for the midterm and allow for a stronger advance afterwards. The EWO here has popped up some, so I would say if we did break down one more time if that 1105 area and the 20 DMA did hold as resistance and we got a rejection to the downside, there is a good chance that it could develop a positive divergence in this oscillator, the EWO, as well as the RSI here. A pretty good chance if we saw a lower low in the price, we'd probably end up with a higher low in the oscillator, producing a positive divergence there. And that would be a fine setup, especially since the RSI is been driven down here well below the 20 level, which we haven't seen in a good long time. The last time we saw it was back here in November of 2014, and you can see that created a significant low with a nice pop to the upside up to 1300 from the 1130 level. And back here in 2013, we saw some similar hits on that 20 level and pops or recoveries to the upside from those levels as well. So that's what I'm interested in the short term here, is seeing how this bottom is going to resolve itself. Definitely interested in being in the long side here. I think any short potential to the downside would be just very limited. I don't think we're gonna see any more significant crashing at this particular point. The weekly is open to the downside. That's bearish on the MACD, and the MACD on the daily, however, has crossed over into a slight bullish alignment to the upside on the daily. So overall for gold, technically I think we're still kind of in a neutral spot. I do slightly favor the upside though, because the market is respecting this hammer candle back here, and has failed to drop off through this chop. It's been able to, it looks like today, defeat the 10 EMA as a key point of resistance. So really, this market could, I think, be working on what could be a very stealthy rounded bottom, if we can stay above that 1076 level. So I think it's worthwhile to be staying in long. Silver also giving us some fine clues that it may be ready to move up higher as well. This trend line here, which I should probably readjust here. Let me readjust it. This trend line, we certainly got a daily close above that today. So that's an indication that this line is busted, and that could start a short squeeze rally up here to the mid 15 level, possibly, maybe even all the way up here to the mid 16 level. See that as two potential points of resistance that, or targets anyway, initial targets that silver could come up to. So I think it's definitely worthwhile to be long in the silver market at this time. And you can also see here that the 20 DMA, we've got one of the largest incursions above the 20 DMA in a very long time, really since this turnaround here and moved to the downside. And we actually closed the day right at the 20 DMA, which we haven't done so far in the last few months. So that's another indication that the downside potential is waning, and we could be starting a turnaround here to the upside. Silver on the weekly, we do. I didn't quite measure it there, but I'm just eyeballing it. That could be register as a hammer candle. Not the most ideal, but it definitely could count this as a hairy bottom as well, meaning that the last 3 weeks we've seen some intra-week incursions below the lowest weekly close, which is right here at this red candle that closes at 1464. So the last couple weeks we've seen incursions below that level, but come up and closed above that the lowest weekly close there a couple times in positive ranges. So these shadows to the downside of these candles could be forming a hairy bottom, what we call a hairy bottom. Let me see if I can find any other really good examples of hairy bottoms in the previous past here. Here's a really good example here. Just you're getting a long candle or shadows on these candles here to the downside, and then closes well above where the incursions are. So it's an indication that the bottom is a bottom is forming, and you can see that did secure a low. That formation in those candles did secure a low for a good long time, several months from that point onward. So let's go to the EWO here in silver. Certainly have a positive divergence there set up, which I showed you before. RSI, the same thing, got the positive divergence there. And also, we've come back up here into the neutral range in the RSI between the 40 and 60 level. And we also have, let me back up here, moving here a little bit. We do have a positive divergence on the top side of this oscillator, meaning that the oscillator is starting to produce a higher high compared to the last swing high here in this market, even though it has a lower high in the price. So it's often a leading indication that you could be starting a bottom here. It doesn't necessarily mean the bottom is in. It just means that even if you did get a lower low in the price, more than likely it'll set up a positive divergence on the bottom side as well. So so even if our long side position does fall apart and we do get stopped out and it does move lower, I would still be interested in the long side of this market because more than likely we'll be setting up that positive divergence in a location that is already very much oversold. The MACD on the weekly is open to the downside, and on the daily here we are open to the upside. So that's bullish. So overall for silver, I think we're working on a possible turnaround here. Definitely worth being long here, keeping the stops close though. And we'll see what we get next week. Let's take a look at platinum. All right, so platinum here, still underneath this short-term or mid-term trend line as a form of resistance. If we get a pop above that, that could set off some short squeezing to the upside. The QG3 still is in a bearish alignment, more so than gold or silver. And platinum on the weekly, another bearish close there on the weekly. The previous hammer candle did, which set a key support low at 944.50. We did see this week make an incursion below that, so it kind of negates that potential of that hammer. Though one slightly positive note is that even though we did get the incursion below that hammer candle, we didn't see a capitulation. We didn't see any significant fall through to the downside. We actually closed the week a little bit higher than that. The EWO here does have a positive divergence that has been set up. We got a lower low in the price, a higher low in the oscillator. So that's being worked on, showing some good potential for a turnaround. And same thing with the RSI. We got the lower low in the price, but the RSI has, with that, formed a higher low in the oscillator, giving us the positive divergence. And the MACD on the weekly is open to the downside on the weekly, as you would expect. And on the daily, we've kind of just closed out here, very neutral, with the signal line closing right at the baseline. So overall for platinum, I would say maybe not quite ready for a turnaround. It's working on it, but I think you need to give it a little bit more time to proof itself that it's ready to move on to greener pastures on the upside of this market. Okay, so let's move on to the Elliott wave charts here. All right, so here's the gold COT commitment of traders analysis that I've done previously, and just wanted to point out again. So I've gotten a few new subscribers, and I want to keep them kind of up to date on what's happening here in this market. Is that where we're at with the shorts in this market is at extreme levels. We haven't seen this total amount of shorts in this market as far as the COT is concerned. Well, I'm not going to drag you all the way back here. I'll just tell you, we have never in the history of the gold market seen this level of shorts in the gold market. Now, this is a bullish indication. You know, some of you might be going, well, with all these shorts, boy, isn't that an indication that this market is super bearish? No, on the contrary, it means that you've gotten just about everybody plugged in on the short side of the market, that the long side of the market, the bulls in the market, are almost vacant. So that means that when everybody's loaded up on one side, it means that they have no more to give on that side. So you're competing bulls because the shorts have already positioned themselves. The bulls have the ability to come in here and start dictating terms on where this market's going to go, because the short sides, the bear side, have pretty much exhausted their power, their ability to suppress the price. So this is also just like a big fat juicy orange that's very ripe and ready to be squeezed. There's a lot of shorts that need to buy in order to cover their positions if the price starts moving against them, and or if those who are short are deciding they want to cash in their profit in on their profitable position, which creates buying pressure. So this is a very bullish indication, and you also can see that up here in the total open interest. Total open interest is right up there with previous bottoms that we've seen in this market before a significant move to the upside. So yeah, whether we get one more lower low or not in this market, this is prime territory for looking at the long side, looking at this for a bottom that could turn around and give us a nice run to the upside. Not a prime time to be adding shorts, that's for sure. All right. Here's one idea I have, just from a technical perspective, is that I'm thinking this could be a false breakdown underneath this trend line, and we could get a pop up here, at least up to that 1130 to 1142 range, maybe even test this orange trend line in the next few days. Possibly test that, and then there's a chance that you could get another rejection to the downside, which could bring it down back to the 1040 level. I see that as a potential, and maybe finalize a bottom somewhere in September or possibly October. And that would be a nice 5-way move to the downside too, off of this this top with a 1, 2, 3, 4, 5 as well. So that would be just a really beautiful setup to get in on too, if that was to take shape. The other potential I see is as we get a larger pop up here, the challenge, this last swing high, midterm swing high up here at about 1232. If we do that in one big impulse, then a pullback after that could set up a inverted head and shoulders pattern with the left shoulder here. This would be the head. This would be the right shoulder, or the right neckline, excuse me, right shoulder, and then some follow through to the upside, which could produce a major rule of 4 breakout to the upside as well. Right there at about 1232, making higher highs above 1400 would not be out of the question at all. It could certainly go up to 1600 possibly in one big drive. I see that potential as well. So I think we just need to be patient here. We'll keep the long side for now. If it drops, that's okay too. We'll be looking to get a hold of it if it goes lower also. All right, let's move on to here's gold with the RSI 14. And again, just showing you how the last few times that we've come down here all the way to the 20 level on the RSI, it has formed some significant bottoms before we got some of them were just small little pops to the upside. Some of them were significantly larger. So, and we're right back there in that potential. Whether we get a lower low in the price or not, we are in very oversold levels worthy of a long side position. Here's the micro count that I'm kind of paying attention to right now. We did get this impulse to the upside that does look like it's a standalone, and then an ABC to the downside correction, and now another impulse kind of in the middle of things, which makes me think this could be a subwave 1 impulse, and then we've got an ABC that looks finished for another wave 2, subwave 2, and the payroll report that came out did produce some whipsaw here, but closes the day in the higher part of the range, closing above this orange trend line, which has been tested once, twice, 3 times, and this would be the 4th time, really, 4th or 5th time if you want to count it that way. Whatever the case, this is a potential Rule of 4 breakout potential to the upside to fill in this manic drop, come up here to possibly the 1130 level. So while we're above 1082, which was today's low, I think we're in good shape for some more upside. Break below 1082, then I'd have to say the market's decided to shrug off this bullish potential, and we might actually get some fall through to the downside off of that after denying this bullish move today. All right, so here's silver. We've got, I've redrawn this ending diagonal to something that looks a little bit more likely with a 1, 2, 3, 4 flat, just a larger 4 flat than I had originally considered, and then basically a truncated 5th wave here to the downside. So that all looks good and finished, and now we may be starting a corrective move to the upside. I pulled in this Fibbo retrace meant levels here, and the 38.2% there at 1566 looks like the first potential target, basically fully retracing this ending diagonal, which would be appropriate, but also the 61.8% Fibbo there at 1646 is another potential target that I see this corrective move to the upside could hit. So, but we're going to have to stay above 1436 for now to be able to realize that. Okay. Here again, there just this trend line that we talked about previously. We've closed above it on a daily closing basis. That's bullish, so that could freak out some of the those who were previously short, and they may be looking to cover maybe early next week and cause the price to move up. All right, so moving into GDX here, this is kind of a longer term count. We got a wave 3, wave 4 potentially, or a C and a double X, and we're working on our final zigzag to the downside. That's another possible count. Whatever the case, whether it's C or whether this is a wave 1, 2, end of wave 3, and we're getting a wave 4 bounce only with this red projection. This could be a wave 4 before another wave 5 to the downside. That's another way of looking at it. But if we zoom in here, whatever the case, whatever the larger Elliott wave count may be, a turnaround here does look possible very soon, if we haven't gotten it already. We did previously, let me move in here, we did have this piercing bottom here, this green candle, where we gapped down but then reversed and closed well above the midpoint of the previous red candle. That was expected to hold support, but we did get this what looks like a potential fake out to the downside upon breaking below that level. We haven't seen any significant fall through to the downside, and that's typically what you would expect with a bullish hammer candle or a bullish outside key reversal or a piercing bottom. When you see those type of bottoming candles broken, typically you see some fall through to the downside, and we're just not seeing it so far this week. Now today was kind of an odd day. We got this move up. It was looking bullish at the start, but I think there's a lot of investors still thinking or feeling this out for a short play, and I think today we saw them step in with some additional shorts just below this orange trend line, and they more than likely, whoever shorted today, more than likely has their stops just above that orange trend line. So if we see that orange trend line defeated next week on Monday or maybe Tuesday, those who had jumped in short here just recently may be bailing. Actually, those who were short from all the way up here may be using that trend line as a trailing stop, and they may be covering if that level is broken. So very key level of resistance right there to be paying attention to at this point in time. Let's move along. GDXJ, pretty much doing the same thing. We got this very similar trend line, even a firmer test. We did see the rejection, so inverted hammer candle. This isn't the best placement for an inverted hammer candle. Usually you want to see that at the top of a trend, not in the middle of a bunch of congestion. So not the most ideal placement, but it does still set a key resistance at today's high of 1956. So if we see that 1956 broken next week, that's going to be a really good indication that this short squeeze could be on, and we could be seeing a nice bounce to the upside. But if we stay below that level, there is a potential of another push to the downside still open. I like the fact that GDXJ is showing us some relative strength over GDX at what could be a major bottom, because you want these are the places where you normally see the riskier juniors getting the attention, and also the juniors are often the one. Well, I can tell you for a fact that the junior miners have been beaten up far more severely in their price compared to the seniors that make up the GDX. So with the juniors beaten up so much, that means they've got a lot more potential to the upside, especially those juniors that have perhaps been beaten up a bit more severely than they really should have been, just because they're lumped in with the whole sector. So any of those juniors out there that have pretty good balance sheets and have pretty good operations set up, or sitting on some good holdings, or what have you. Those are going to be your juniors that you're going to want to be paying attention to, especially if they've been severely beaten up, and maybe taking some stabs at them for a long-term investment, especially if they're offering a dividend to kind of cushion any further downside. Let's move along here. Go to. All right, so here's a GDX on the QG3. You can see here that today's action did see an incursion above the 10 EMA, which has served as resistance for a good long time now. So it's just an indication that that resistance is weakened a bit, not necessarily broken. And then the 20 DMA is also going to be a key level of resistance, and that's coming down here quickly. And early next week, it's going to be right there at about 1413 or so. If we see that challenged or broken, that's going to be another good indication that we're going to see an advance to the upside. But while we're below that 20, that's that still leaves the door open for another lower low, and while we're below that 20, so it's kind of make or break time. If GDX is really serious about turning around right here and now, it's going to have to defeat that 20 very soon, probably next week. We see a rejection of that 20. We could be entertaining the possibility of another shot down to test the lower Bollinger Band, which would be okay as long as the test of that Bollinger Band does produce a strong turnaround or a quick bounce right back up. So we'll see what we get. GDXJ looking a little better here. Almost tested the 20 DMA today, so that's could be coming up here fairly soon. Something to watch for. And then GDXJ with the RSI 14 on the daily chart. This move to the downside in the RSI. This is the lowest incursion into the bowels of the RSI 14 on the daily scale ever in the history of GDX. If we go back here. It's not moving very quickly. Kind of bogged down, but you can trust me on it, or you can verify it for yourself. So yeah, this is an indication that we've gone to crazy, ridiculous capitulation levels. I mean, this tells me that probably just about every bear in the world has jumped in on this, and just about or very a good portion of the previous bears have given up, and they're just out of this market. They're sick and tired of having anything to do with it. Similar to kind of back here too. See this huge move up in the price. I think that 80 level. Let me go back here. That 80 level, touch of that 80 level, which is extremely overbought at the time, I think was also a historical high in the RSI since the inception of the GDX. Why are you bogging down on me? Come on, let's go. Yeah, blew through the 70, came right up here into the 80 level, right? And look what happened. That corresponded with this very significant top before a major decline. So the same thing could be happening just on the flip side. We've made this huge move below the 20. This is actually probably more of a manic move than this was, all right? And you can see the kind of sell-off that it generated. Now picture what kind of buying spree that this could generate with where it's at. I think there's really excellent potential there. If we're not seeing it right now, it could be coming up fairly shortly. So stay tuned. All right. Well, I hope you found this video interesting and useful. And I wish you all a great weekend, and we'll come back at it next week. Take care, all. Adios.